22nd of July 2015, 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Fair amount of news overnight, mainly driven by earnings. The European and Asian markets lower following disappointing earnings from tech heavyweights in the U.S. Gold and oil are lower. The U.S. dollar is lower versus the pound, yen, and higher against the euro. It's interesting to note the U.S. Canadian pair sets a 6-year high above $1.30, the $1.30 level, which is nice because I happen to be in Canada right now. Apple's earnings per share beat $1.85 versus $1.81 expected. Revenues came in at 49.6 versus 49.4. However, the Q4 guidance was revised down 49 to 51 billion versus 51.1 billion prior. iPhone sales missed at 47.5 million units versus 48.8 million. Shares on Apple earnings were down negative 6.9% after hours. There was an immediate move lower on the announcement. Also, we got Microsoft to beat at 62 cents versus 58 cents. Revenue 22.18 versus 22.03. Unearned revenues missed. Nokia wrote down bigger than expected. The Nokia write-down was bigger than expected. Shares were down 4% after hours. And then Yahoo yesterday, earnings per share came in at 16 versus 19 cents expected. So a complete miss there. 1.04 billion in revenue versus 1.03. It seems like Yahoo is becoming less and less significant in the tech giant world. Shares are down negative 1.8% after hours. This morning, Boeing reported 1.62, $1.62 versus $1.37, 24.5 billion versus 24.2 billion. A look ahead at what's coming for the session. We just had the FA House Price Index. Haven't seen this number before, but it came out at 0.4 in line. Looking ahead, we have 9 o'clock. We have existing home sales expecting 5.4 million units at 9:30 Central, 10:30 Eastern. We're expecting DOA U.S. crude oil inventories looking for negative 1.75 million. Distillates plus 1.8. Gasoline inventories plus 600,000. That's pretty much it for today. Earnings after market. We're looking for American Express $1.32 and Qualcomm at 95 cents. Let's have a look at our technical picture. Before I start on this, Wednesdays are usually reserved also for the Trade Wisdom segment, which is a segment that was started about 4 weeks ago in response to emails and help needed by traders, emails received by me. So I just would pick up a topic every Wednesday and cover it at the end of the Trader Bite. Received multiple requests that this segment is separated so that it can be found separately on YouTube or watched again and again without having to mess around with when it starts. So that video will be released just after this Trader Bite, and it will have its own link on YouTube and so on. So look for that. As far as yesterday, Hypo 1 to review. Again, all this stuff is available. You can watch yesterday's YouTube and verify Hypo 1 for yourself. Hypo 1 was responsive buying to 2122. I had mentioned in yesterday's outlook for the session, the key trade of the day being Hypo 1 was an aggressive short in the 2122 area to target to 2115 quarter. 2114 half is the MC point of control. 2115 quarter is the naked point of control right here. This naked point of control. This comes from a couple days ago. from Friday. Some pretty good balance on Friday, and then so here's Friday, pretty good balance, and then at the end of the day, it ended up creating another HVN up higher, and we left this point of control untouched. So we touched it yesterday. That was a primary target below. That worked out beautifully. Took quite some time, but it did work out beautifully. The next target down was 2114, and I showed you where that came from. The 2114 half is the MC point of control, the MC being the micro composite point of control. A composite is a profile that's created from two or more balance areas. This composite is right here. These 2 days, you can see that the point of control on this day and a point of control on this day were in line, and the combined point of control for these is 2114 half, and that got tagged as well. Beyond there, the next area down would have been the 2112 and a quarter. The 2112 and a quarter is an LVN. It's obscured by this stuff here. Let's get that out of the way. So the 2112 and a quarter is this MCLVN, low volume node. Again, if you're not familiar with these terms, there's a glossary that covers a lot of this stuff. On the site, it's futurestrader71.com/glossary. 2112 and a quarter is the last low volume node separating the area we came from from the high, the all-time high area, and the all-time high volume node, which was 2116 or so. This is an important area, and what happened yesterday is it pushed through by 4 ticks, and you can see it balancing, and it's not a coincidence that the point of control yesterday was right on top of it, 2112.75. And so that completed hypo 1. Why the 2121, 2122 area? Again, I covered this in depth in yesterday's video, but that area represents repeated tests and acceptance as the market pushed up. So here we go. So as we came into this, you could see we pushed up, and then we traded around this 2121 area. We ended up building on the overnight session a point of control there. Then on the next day, on Monday, we built a point of control right at 2121, and in yesterday's session, we built an additional point of control at 2121. And the expectation is that since we were opening below it, the expectation is that the liquidity that was available here, whatever that liquidity may be, some sort of a program that is hedging positions, hedging against options or equities or whatever, that program is expected to stay in place. It contained a ton of volume on a relative basis, so the expectation is that as we push into it, we expect that liquidity to hold, and given the circumstances that we have here, the expectation is for this to roll over, and it did. So that worked out perfectly. And then as far as one-time framing, the market's been one-time framing up for quite some time. Again, as I showed yesterday, the one-time framing has been taking place since this low that we put in at 35. Since then, we've had higher lows, higher lows, higher lows, big gap, higher low, higher low, higher low, small gap, higher low, until the new all-time high, with yesterday ending the one-time framing up, and the market's basically indicating that it's time to seek out buyers below. In order to seek out buyers, the market's likely to auction lower, which is what's expected today, of course, with the Apple with the Apple earnings release and so forth, we are trading below anyway. But yesterday, if you look at where we went yesterday, very logical. That was the extended target. The extended target was 2107.75. Where do I get this number from? Right there. This is your 2107.75. This is the gap zone. Okay. This is the gap zone right here. I can't draw a straight line. And the market basically came down to 2108 and missed the high by a tick. That gap zone was created on Thursday. 2107.75 was Wednesday's high. There couldn't have been a more, I don't want to say perfect because we're in the trading business, there's no such thing, but a more accommodating auction yesterday. If you lost money in it, I apologize for saying that, but the logic was very clear, and the market followed it, and that's not always the case. Looking at this impulsive move down yesterday, I did say that, again, that's another reason for the market to likely continue, and it did, but the impulsive move down did not create a good continuation move. We essentially have a new impulsive move on a higher time frame that goes from 2126 and a quarter to 2108. So about 18 points. And it pulled back. If I threw a fib on here, looking for the mid of this move, 2117.75. I'm going to continue to look on the short side as long as we stay below this. 2117.25 is coinciding with the low of Monday. I will look to short this area. I'm looking for this if it does come up, I'm looking for it to continue lower, and if it does continue lower, then the next target will be 2104, the 2104 area, which is the cluster here of a gap close on that Wednesday trade, plus the point of control for that area, and a high volume node on this MC. So this is what I'm looking for today. Unfortunately, I was looking at this last night and it looked very sweet. Unfortunately, it looked really good because the overnight session was as flat as a pancake until this morning, the overnight session. So we see here Apple's earnings release causing a pretty big shift down, basically taking back the rally that went on the close. Then we have this completely flat play, and then this morning at 7 a.m. The market started to move lower and has taken that trade away. So the continuation trade to 2103, here it is, we're trading 2103 quarter, has already kind of happened. So reading this overnight profile tells me that there's no consensus. This is a very boxy profile. There's no consensus on value overnight. There's some pretty heavy volume. We've traded 144,000 contracts in the overnight session alone, and so there's quite a bit of activity. I expect some volatility to carry over today. Note that the delta from yesterday's trading was pretty strong on the downside. We breached the trending delta figure of about 40,000. That's based on a study of 1,400 days going back. I think it hasn't been updated in about a year and a half or something. But a pretty strong selling delta on yesterday's action. I do expect this to attempt higher, and I expect attempts higher to fail. I expect this to continue lower for now. So today, that's a lot to digest, I know. Today we have a gap. We have the overnight inventory short. We're heading for 2101, which is the next big microcomposite area. Below that, we have the big one is 93.75. 93.75 is the next key area down right here. If we continue lower, the market will continue to seek lower prices to find what? To find buyers. And for now, it's the overnight inventory short. I'm expecting it to open. I'm expecting it to have a hard time finding responsive buying, but I expect it to find some responsive buying towards that 2108 area, and then I expect it to fail and continue to 2101 and push down into the 2093.75 area. This is assuming no news interrupting this sequence. I do not expect the market to open up unless some great thing is happening. I don't expect the market to open up, test the overnight low, and shoot up. This is the second hypo. It's still a possibility, but I don't expect it. It's not a high probability hypo. I think a lot more supply is likely to come in and keep this down than buyers coming in to shop for bargains already. I think buyers are more likely to get better prices towards the 93 area. I hope all of that makes sense. I'm out of time. I will not have a chance to review the other products. Again, look for a tweet on Twitter, and for Stage 5 traders, look for a link in the chat room on the Trade Wisdom session. Hopefully it's something that you can use. The session is going to be about rough patches, remedies, next steps, and what they mean. Good luck to you, and I'll catch you tomorrow. Take care.